Okay, let's unpack this. Today, we're diving deep into the world of Jim Simons, the math legend, who basically reshaped finance with algorithms.
And then dedicated a huge fortune to science. It's quite a story.
It really is. And for this deep dive, we're drawing on a simulated interview with him. It covers, well, his whole journey, really.
Right, from his early days through the founding of Renaissance Technologies, his philanthropy, and even some advice he offered.
Exactly. So think of this as maybe a shortcut, a way to get inside the thinking of this titan of finance and science.
Yeah, our mission here is just to pull out the most important nuggets, the key insights from that source material, and, make these pretty complex ideas a bit more accessible for you.
Let's start at the beginning then, because what's really striking is that his path didn't start anywhere near Wall Street.
Not at all. It started deep in abstract mathematics, pure math.
Differential geometry specifically, which sounds, completely removed from trading floors.
It does. It's about studying shapes and curves in complex spaces using calculus. But the core thing for Simons, even back then, was this fascination with patterns, finding structure, even in these super abstract concepts.
So the move into finance later, it wasn't quite the radical leap, it seems.
He didn't see it that way, apparently.
Yeah.
More like an extension of that mathematical mindset. He started thinking, well, maybe markets, even though they look chaotic, maybe they also follow certain patterns.
Patterns you could potentially model statistically.
Precisely. And he started experimenting with this stuff quite early, back in the early 70s, building statistical models to try and predict price movements.
Which must have seemed completely bizarre back then. Wall Street was all gut instinct, right?
Oh, completely. Intuition, experience, maybe some basic charting, but not heavy math. The source material mentions the old guard thought using equations like this was just loco.
Yeah.
Crazy talk.
Agrees. They just couldn't wrap their heads around numbers guiding decisions instead of, a trader's feel for the market. But Simons had that simple counter. The numbers don't lie. Not if the model is solid, anyway.
And that conviction, well, it eventually led to Renaissance technologies, which really turned things upside down.
Okay, so let's get into Renaissance. What made it so different? This is where it gets really fascinating.
Well, the source is really clear on this. Who they hired. It wasn't the typical Wall Street crowd, not MBAs, not economists primarily.
Right, they hired scientists.
Exactly. Physicists, mathematicians, statisticians, computer scientists, people working on machine learning way back, folks trained to find signals in noise, to see patterns in complex data.
Even if they knew nothing about finance beforehand.
That was almost secondary. The key skill was understanding data, modeling systems, recognizing those subtle patterns. The finance stuff, presumably they could learn. The deep analytical skill. That's what Simons valued.
And this approach led to the Medallion Fund, which is just legendary.
The returns are, frankly, astounding. Consistently high, year after year, decade after decade, often completely disconnected from general market moves. It's kind of unreal.
But it wasn't just about having smart people looking at data, was it? The source mentioned something about the process.
Yeah, it wasn't just collecting data and building a model once. The algorithms they developed were adaptive.
Adaptive. What does that mean here? Like, they learn.
Essentially, yes. Think of it like this. The market isn't static, right? Patterns that worked last month might fade. New patterns might emerge.
Okay.
So an adaptive algorithm is designed to constantly ingest new data, analyze its own performance, and automatically tweak itself. It adjusts its parameters, maybe even changes its underlying logic slightly to stay effective as the market evolves.
So the model itself is learning and changing constantly.
That's the idea. It's this perpetual evolution that's crucial. Because if your model is rigid, it's eventually going to break when the market shifts.
Makes sense. And there was another critical element mentioned, something about keeping it all under wraps.
Oh, absolutely. Secrecy was paramount. If other firms figured out exactly how Medallion's algorithms worked and started copying the strategies,
The edge would vanish.
instantly. The patterns they were exploiting would get traded away, become less profitable, or disappear entirely. Their whole model depended on those insights remaining proprietary, kept very, very quiet.
Okay, so you have brilliant scientists, adaptive algorithms, intense secrecy. But even then, this kind of quantitative investing has its challenges, right? What did Simons see as the biggest pitfall?
Yeah, he points specifically to overconfidence, which is maybe a bit counterintuitive when you're talking about data-driven models.
How so?
Well, think about it. Even a really good trading model, one that's profitable, might only be right, say, 60% of the time. That's fantastic for making money consistently.
Right, a 60% edge is huge in trading.
It is, but it also means it's wrong 40% of the time. If you start believing your model is magic, if you forget about that 40% because you've had a good run,
You get complacent.
exactly. You might take too much risk, ignore signals that the model is struggling, or just assume past performance guarantees future results. That's when you can face really big losses, when that inevitable 40% hits harder than you expected.
So even with all the math and computing power, you need humility.
Absolutely essential, non-negotiable, according to Simons. You have to constantly question your assumptions, stick to the model's discipline even when it feels uncomfortable, and always be looking for ways to refine and improve it. Never assume you've cracked it perfectly.
And what about the future? We hear so much about AI now. How did Simon see that fitting in?
Well, he acknowledged it's already making an impact, obviously. Computational power keeps increasing, AI techniques get more sophisticated.
That makes sense about it.
But he felt the real bottleneck, the ultimate driver of future success, isn't just more power or fancier off-the-shelf AI. It's not just about applying existing tech harder.
What is it then?
Human creativity, still. The really big breakthroughs, the next generation of winning algorithms, he believed, will come from genuinely novel, original ideas about how markets work, how to find new kinds of patterns. That spark of human insight to frame the problem in a new way.
That's really interesting. It's not just about the machines.
No, it's about the ideas behind the machines.
Okay, fascinating. Let's shift gears a bit, because Simons didn't just build this incredible financial engine. He's also known for massive philanthropic efforts.
Huge efforts. Through the Simons Foundation, largely funded by his success at Renaissance.
What was the driving force there, according to the source material?
It seems to stem from a really deep conviction, a belief that basic science, math, physics, biology, the fundamental stuff is, well, the foundation of everything. All progress, all understanding.
So investing back into that foundation.
Precisely. He felt it was essential to support that core scientific enterprise.
A foundation focuses on some pretty specific, heavy-hitting areas.
Yeah, it's not just general funding. They pour resources into really complex, challenging fields, things like autism research, understanding the basics of life through genomics, pushing the boundaries of theoretical physics, exploring the oceans.
So tackling the big fundamental questions.
Right. The goal seems to be solving problems that, money alone can't fix, but that need sustained, focused, long-term scientific effort. Problems that transcend just financial metrics.
And beyond pure research, what about education? Did he talk about that?
Very much so. A big part of the mission is getting young people excited about science, seeing it as a cool, important, and viable career path.
Which makes sense, given his own background starting in pure math.
Absolutely. So the foundation supports math and science programs in schools, helps fund teachers, provides scholarships and grants for young researchers, backs outreach initiatives.
Trying to spark that interest early.
Yeah, the source mentions the ambition is really high, trying to help nurture the next Einstein, essentially, inspiring that next generation of scientific talent.
Okay, so if we tie all this together, the journey from math to markets, building Renaissance, the massive philanthropic giveback, if someone listening is inspired by this, maybe wanting to combine deep thinking with real-world impact, what's the core advice from Simons?
The source material really boils it down to 3 key things that echo throughout his story. First, and maybe obviously, learn mathematics.
All foundation.
Right. He calls it the language of the universe, but also, crucially for his path, the language of the markets. You need that quantitative grounding.
Okay, number 1, math. What's next?
Second, surround yourself with brilliant people. Renaissance wasn't just Simons, it was the team. He stressed that nobody achieves this kind of thing alone. Collaboration, diverse, smart minds, that's critical.
Makes sense. Teamwork. And the third piece.
Be persistent, especially when you're trying something new or difficult, like quantitative trading was back then. You're going to have setbacks. Failures are just part of the process.
You can't give up at the first hurdle.
Exactly. The key is to iterate. Learn from what didn't work, adjust your approach, refine your models, and keep trying. Persistence and adaptation.
So looking back at our deep dive today, what are the big synthesized takeaways from Simon's story as presented in the source?
Well, first, there's that powerful link between seemingly disparate fields. Deep scientific and mathematical thinking can unlock incredible value in places like financial markets. It's about the underlying logic of patterns.
And that idea of adaptability seems crucial. The world changes, markets change. Rigid models are doomed.
Absolutely. Constant innovation, constant questioning, constant evolution that's essential, not just in finance, but probably in any complex system.
And then there's the philanthropic angle.
Right. The principle that knowledge and success, especially when derived from finding new patterns or building something innovative, come with a kind of responsibility. Using that success to benefit the common good, investing back into science in his case, was clearly a major priority beyond just accumulating wealth.
So his legacy isn't just about the trading algorithms.
No, I think it's much broader. Yes, he revolutionized trading with data science, no question, but it's also about fostering fundamental research in critical areas,
Mm.
potentially impacting health, our understanding of the universe, and inspiring the next generation to maybe bridge science, tech, and business in new ways.
It really is an amazing full circle, isn't it? Starting with abstract patterns in math,
Applying that lens to find hidden patterns in markets.
using the immense resources generated from that.
To invest right back into the core science that underpins everything. It's quite profound.
It really highlights, I think, the power of seeing connections, the value of that scientific mindset even outside the lab, the humility you need when dealing with complex systems.
And that sense of purpose beyond just profit.
Definitely. And the source material ends with a really striking quote from Simons himself.
Yeah, he said, money is not an end, but a means. What you do with it is what is truly valuable.
That really sums it up, a powerful thought to leave with. Which brings us to a final thought for you, our listener, to maybe mull over.
Given this journey, we've explored how Simons applied deep knowledge from one area, science, to unlock value in another, finance, and then directed that towards a broader purpose.
What overlooked patterns or maybe hidden connections might exist in your own work, your field, your interests? Could understanding those connections potentially unlock unexpected value? And maybe more importantly, how could leveraging that understanding serve a purpose that goes beyond just your own personal gain? Something to think about.